probably going through like Henry Schein or Patterson, and all the interest goes to them, not back to your business. So again, when you're paying interest on these loans for the piece of equipment, all of that interest is going to them. You're not able to retain and recapture any of that. Hey guys, this is Chris from the Hidden Reserve, and in today's video I'm going to be specifically talking to all the dentists out there. Today's video is the dental practice war chest, how dentists are building cash reserves for equipment, emergencies, and investing. So let's just dive right into things. So who is this for? This is for the dentist who, number one, is paying high interest on equipment or office financing. Number two, needs liquidity without relying on banks or credit checks. Number three, is tired of bleeding profits to banks, taxes, and volatility. Number four, wants their cash to grow safe and guaranteed. And number five, is building a legacy for their family, practice, and future exit. First thing I want to cover today is the real cost of equipment financing. So dental practice financing companies charge, as you probably know, anywhere from 8 upwards of possibly 15%. And if you're financing for your business right now, you're probably going through like Henry Schein or Patterson to do that. And the problem with that is that you have no control over the payment terms that they make or the terms in general for the loan. You're bound to what they decide. And you're making payments for years and own nothing until the very end, because obviously if you're financing until the loan is fully paid up, you don't own that piece of equipment, whether it's an x-ray machine, office chairs, etc. And all the interest goes to them, not back to your business. So again, when you're paying interest on these loans for the piece of equipment, all of that interest is going to them. You're not able to retain and recapture any of that by financing through them. So you have no equity, no control, and no return on that capital. So the money that you're using to acquire this piece of equipment or whatever it is for your business, you're losing the opportunity to earn interest on those dollars forever, because it's going, you have down payment probably for that loan, and then all of the interest that you're paying for that piece of equipment, you're losing the ability to earn money on that money for the rest of time. Next thing I want to talk about is high income, low liquidity. So you probably have high overhead, taxes obviously, and personal expenses eating away at your income. Number two, your savings is either in a checking or savings account earning 0.01% or in market assets with risks. And number three, when opportunities arise, you're either stuck or scrambling because of the lack of liquidity. And you're trying to figure out, okay, I've got all of my money tied up in my business or other investments. How am I actually going to get the liquidity necessary to expand or whatever, take advantage of whatever opportunity pops up? Next thing I want to cover is your own private reserve. So with your own private reserve, this is a way that you can have liquidity, control, and guarantee growth on your money, and you have the ability to take advantage of opportunities without having to go through a third-party lender, whether it's Henry Schein, Patterson, a bank, etc. So first off, what even is this private reserve? So what it is, it's a high cash value whole life insurance contract. And the first point I want to cover here is that your premiums build cash value that grows tax deferred. So how this works is that you make a premium payment or deposit into your whole life insurance policy. Once that is in your policy, a portion of that's going to go towards cost of insurance, administrative fees, etc. And then what's left is going to go towards the cash value component of the policy. Your cash value grows at a guaranteed rate of return. And if you're with a mutual carrier, which we always recommend that, you're going to get a dividend from the mutual carrier on top of the guaranteed interest rate that you're earning in the policy. So you might get like a 3% guaranteed rate of return, and then on top of that, you'll have another 2% from a dividend from the carrier. So you're going to get about 5% on your money. Now, I need to add this in there because it's very important, is that 5% is a gross rate of return. So that's not factoring in costs coming out of that. So your net is going to be more realistically, in this example, probably around 4% on your money, okay? Next, you can access your cash value at any time with no credit check or approval. So over time, as you build up your cash value in this policy, you can take a loan against your cash value, and I'll explain more how that works in a minute, but you can take a loan against your cash value and use that money to self-finance, to go buy that piece of equipment, whether it's an x-ray machine, whatever you need for your dental practice. You can control the financing, and you have the ability to do that without any red tape or anything stopping you from doing so. So how that works is when you take a loan against your cash value, let's say you have $100,000 in your cash value and you need to buy an x-ray machine for $70,000. What you would do is you take a loan against that $100,000 for $70,000. So the insurance carrier that you're with, they're going to give you a loan of $70,000. There's going to be interest on that loan. Around 5% is pretty standard right now. But now you've got that money and you can go out and buy the x-ray machine in cash, and then you can repay that loan to the insurance carrier however you want. There's no set repayment schedule on that. So you're not going to be locked in like, hey, over the next 60 months you have to pay us back at this interval. You can decide how you want to repay that back. And meanwhile, while you have that loan from the insurance carrier, your full $100,000 in your cash value is going to earn that guaranteed rate of return and dividends if you're with a mutual carrier, as if you never touched the money. So that's really the power of a strategy like this, is that you're earning money in two different spots. You're earning money internally with your policy, your cash value, and then you're earning money externally, hopefully, if you're buying like a piece of equipment that's going to allow your business to earn more revenue. So that's a bit how that works. And then lastly here, your money keeps compounding even when borrowed against. So what I just touched on, when you take a loan against your cash value, you're still going to earn interest and dividends on your full cash value as if you never touched the money to begin with. Next up, build on rock, not sand. So market losses can crush confidence right before retirement. Number 2, whole life gives you guaranteed non-correlated growth even in a storm. So that's like the whole theme of this presentation today, is making sure you have a piece of your financial portfolio that's built on guarantees. I'm not anti-stock market or crypto or real estate or anything like that, but it's really important that you have some of your money where it's guaranteed. So if worst case scenario happens, the markets crash, you have something that's that's completely uncorrelated with the markets. It's not going to lose value. It's going to continue to go up in value, whether the stock market or whatever market's doing really well or if it's doing really poorly. And then lastly here, build a financial foundation that won't shake when the markets do. So again, it's really important to have a foundation that's built on guarantees so that when these other assets retract back, you're not scrambling and worried, how am I going to retire? Oh my gosh, my whole portfolio, is down. You have something that's going to be stable for you to access, and it's going to continue to grow over time. Next up, protect your family and your practice. So most dentists are underinsured or unprotected. Number 2, the disability or death could force your family to sell the practice. And number 3, without liquidity, your spouse may be forced into a fire sale. So it's really important to have some sort of life insurance in place to protect yourself so that your family can maintain the same standard of living and also isn't forced to sell other assets to generate or get capital to maintain the same lifestyle or to pay off debts, etc. So that's something really important as a dental owner, is making sure that you have some sort of life insurance in place to cover you and your family. Next, why savvy dentists implement IBC. So basically a summary of what we talked about in this presentation is, number 1, you can finance your own equipment. And to recap that piece is, over time, as you build up a cash value in your policy, you have the ability to borrow against that money in your policy, and then with that, there's no credit checks, there's no loan application process, and your money inside your policy is still going to grow, is still going to earn guaranteed interest and dividends if you're with a mutual carrier, as if you never touched the money, Meanwhile, you have the loan from the insurance carrier that you can use to buy an x-ray machine or whatever equipment to expand your business. That's really, really important. And last thing I want to touch on that is it beats the financing restrictions from going through another third-party lender like a bank or like a Henry Schein or a Patterson. You have the ability to control the repayment terms on that. Yes, there's an interest rate that you're going to have to pay to the life insurance carrier, but you're going to be earning on those dollars in your policy still. And on top of that, you can make a repayment schedule that works for you, whether that's over 60 months, 24 months, whatever you decide to do there. And you're not locked into that schedule there that you create. You can change that over time. Next, you ditch the banks and market volatility. Again, there's nothing wrong with market volatility, but if you are someone who's more conservative and you want to add in something to your financial portfolio that's not tied to the markets, that's where this strategy can be very powerful, because you're going to get those guarantees. It's going to grow no matter what. And then on top of that, you don't have the banks breathing down your neck and putting all the red tape in place of how you can go about financing. Number 3, next up, you create a pool of liquid guaranteed capital. So again, very, very powerful. So as you're saving money in this environment or within this financial tool, it's going to continue to appreciate, and you have the ability to access this money with no 59.5 rule. There's no credit check to do so. It's there and available for when you need it most. Number 4, you grow your funds tax advantage. So again, in these policies, when they're set up properly, you're growing your cash value tax deferred, and then you're accessing that money tax free through a loan, because there's no taxes on debt, obviously. And then number 5, you protect your family in future exit. So with these policies, you have a death benefit component in place. So God forbid something happens to you, a death benefit's going to be paid out to your family or whoever your beneficiaries are. Maybe it's a partner within your business, income tax free, so that they can use the funds to maintain their current lifestyle, pay off debts, buy out the shares from your spouse or whoever of your practice, etc. Very powerful to having that death benefit component in place with these policies. So next step, I hope you got value and insight as a dental owner of different ways you can go about financing and protecting your practice overall. So if you want to look at your own numbers and really see if a plan like this would make sense, I would encourage you to book a call with me. You can set up a consultation. The link's in the description of this video, or to send me an email. It's on screen here. It's thehiddenreserves@gmail.com. And I'd be happy to figure out a day and time that works best. But yeah, I hope you got value from this. If you do have any questions, leave them in the comments below, or to shoot me an email as well. That's also okay. And then like, share, and subscribe if you haven't already. But yeah, again, hope you found value from this, and I'll catch you in the next video.